This is Horizon's Middle East and Africa. Our top stories this morning. At least 16 people have been killed at Sydney's Bondi Beach in Australia's worst terrorist attack after two gunmen opened fire on more than 1,000 people celebrating Hanukkah. Asian stocks fall, tracking a Wall Street sell-off sparked by worries over tech earnings and heavy AI spending. And Chinese stocks also edging lower after the latest data shows retail sales growth at its weakest since COVID, with investment and factory output also missing estimates. It's just gone past 9 a.m. across the Emirates, 7 a.m. here in Cape Town. I'm Jennifer Zabasaja in for Jumana Bersecci, and it is the final full trading week of 2025. There's plenty that is on the docket this week, plenty of economic data points that we are waiting for. We already got one earlier in the day coming out of China. We were mentioning that retail sales that was a bit disappointing than many people were expecting, but still quite a lot for us to get to. Let's just take a look at the quick snapshot of where your markets are trading on this last full trading week of the year. If you take a look at U.S. equity futures, they are pointing upwards right now, following what was quite a mixed week on Wall Street last week. We did see the S&P index actually closing last week lower. But as I mentioned, this is quite a big week as far as economic data goes in the U.S. And globally, so quite a lot to pay attention to. And also last week, we did get a decision from the Federal Reserve. And if we just stick on central banks, we are this week waiting for the BOE, and the BOJ to have their own decisions. And so plenty to pay attention to as far as those central bank decisions go globally. If we just stick on central bank decisions, though, if we take a look at the U.S. 10-year yield, we are seeing yields pulling back ever so slightly, a bit stabilized, though, right now. The U.S. 10-year yield right now consolidated at about 4.1762. And of course, a lot of activity right now in the bond market, and perhaps throughout the week is going to be fixated on a lot of the commentary coming out of a number of Federal Reserve officials, a bit of conflicting commentary that we are hearing, especially after that decision we got last week, and what many of the Federal Reserve officials are telegraphing about the path ahead for rate cuts in 2026 and beyond. Let's just take a look at gold, though, rising for a fifth day, up just over 0.6%, trading above $4,300 an ounce there after having added more than 2% last week. Goldman Sachs, though, among some of those analysts that are expecting even more upside for the yellow metal as we see more central banks buying into gold and also private investors flows continuing. And Goldman Sachs even anticipating potentially we'll get to $4,900 by the end of 2025, which is just a few weeks away, which is hard to believe. Let's just finish, though, on Brent crude, also edging higher, up just over 0.5% there from its lowest level in 2 months. Last week, we were talking about a lot of reports that we did get from the IEA as well as OPEC about some of the supply-demand narratives that are out there right now. Right now, we are seeing Chinese demand feeding into the energy sector, despite some of the glut concerns and also geopolitical tensions still being a part of the picture more broadly, perhaps feeding into some of the risk premia there. So Brent crude trading at about $61.44 a barrel there. Let's just get to our top story, though. At least 16 people have been killed in a mass shooting at Australia's Bondi Beach on Sunday. Two gunmen opened fire on a crowd celebrating the first day of Hanukkah in a park next to the beach. Australian Prime Minister Anthony Albanese called it a targeted attack on the Jewish community.
The government is prepared to take whatever action is necessary. Included in that is the need for tougher gun laws, including limits on the number of guns that can be used or licensed by individuals. A review of licences over a period of time. People's circumstances change. People can be radicalised over a period of time. Licences should not be in perpetuity. And checks, of course, making sure that those checks and balances are in place as well.
For more, joining us now is Paul Allen in Sydney. Paul, quite a tragic story, especially coming at the beginning of this season for a number of Jewish people. Talk to us about the latest. What do we know about this incident and those victims?
Well, we do have flags flying at half-mast around the country today. I'm not sure if you can make out the harbour bridge just behind me here, but the flag's there at half-mast as well. And Bondi Beach at this time of year, very, very crowded, and it was very crowded on Sunday evening. It had been quite a warm day. A lot of people headed down there, and of course the Hanukkah celebration for the first day of Hanukkah was taking place as well, and that's when tragedy struck quite early in the evening, about 6:40 p.m. Now, there were two gunmen, a 50-year-old man, Sajid Akram. He is since deceased, and he owned 6 guns, legally it turned out, that were used in this attack. The police have now seized all of those, and they are all accounted for. His 24-year-old son, Naveed Akram, remains in a critical condition in hospital, although he is expected to survive and will almost certainly face charges. Now, both men told family that they were heading down the coast for a fishing trip. In reality, they were in an Airbnb, presumably plotting this attack. That's now also the subject of a police investigation and search. Among all of this, there were acts of heroism as well, and there have been pictures on social media of Ahmed Al-Ahmed, a 43-year-old fruit shop owner who sneaked up on and tackled one of the gunmen by behind, stripping him of his weapon in an act of incredible heroism. Ahmed Al-Ahmed was later shot twice in the arm and hand. He's in hospital and is expected to recover. You can see there the growing floral tribute down at Bondi Beach. It really is an eerie scene down there. As I've said, it's usually very, very busy. I have never seen it so empty, so quiet. There's a lot of people down there and nobody's talking, just a very silent and somber mood.
And Paul, we heard from the Prime Minister there talking about potentially changes to gun laws. We also heard from international officials talking about potentially how this is a targeted attack. Can you speak to what we are hearing from leaders in response to this incident?
Yes, Benjamin Netanyahu was very quick out of the blocks with his criticism of Anthony Albanese, saying he warned the Australian Prime Minister 4 months ago that a call for a Palestinian state would pour fuel on the anti-Semitic fire. Now, Anthony Albanese was asked a question about that in a media conference earlier today, and he didn't really field the question. He just went ahead and said, look, this is a moment for national unity. But he also took a follow-up question saying, did you ignore warnings from the Jewish community? Because there have been growing incidents of anti-Semitism in Australia and growing concern publicly from the Jewish community. And he said, we will continue to stand with Jewish Australians and stamp out anti-Semitism in all its forms. But perhaps a preview of how this may well come to dominate the political agenda over the next few months. The other thing that you touched on there was the gun laws, and Anthony Albanese mentioned that at the top of the show. Australia's already got very strict gun laws. There's a common misconception that it's illegal to own a weapon in Australia. It isn't. It's just very, very difficult. You have to apply for a licence, but you can own one. But now there is a feeling that even those tight laws need to be tightened further, and that's a measure that's very likely to get bipartisan support.
That's a tragic incident all around. Thanks so much, Paul Allen, for bringing us up to speed in Sydney for us there. Now, coming up, China's retail sales grow at the weakest pace since the pandemic. We'll bring you analysis on the latest data next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Cape Town. China's retail sales grew at the weakest pace since COVID last month, while investment and factory output also missed the mark, underlining growing risks to the economy. Our news desk managing editor, Jill Desis, joins us from Hong Kong. So, Jill, what exactly happened here? Walk us through the details of this latest data point that we got.
Well, Jen, while those investment figures were obviously quite poor, we also had some, underperforming industrial production figures. I think it's really those retail sales figures that we want to hone in on, particularly when China has had so much trouble reviving domestic demand. Now, admittedly, there are some sort of statistical anomalies here that I think you have to take into consideration. First of all, there was an incredibly high base of comparison with the same time period last year. That's when China was rolling out some subsidies to help boost household spending. So that's certainly a factor here. We've also talked to some analysts who've cited the fact that, in November, typically a really high spend month because of Singles Day. Some of those promotions actually started a little bit earlier, kind of in October, so that might be messing with these figures here. But we did see some significant issues elsewhere, particularly within car sales figures. And again, this is an issue that China has really, really struggled with for some time, to the point now where actually the Politburo has cited the need to sort of revive domestic consumption into 2026 is a key priority. I think these figures really underscore just why exactly that's so damaging to the economy.
What then does this mean for the Politburo moving forward, Jill, into 2026? We did hear a bit of messaging last week about potentially what we'll get in the next year. But what, if any, indication could these data points lead to some of the decisions that we'll get next year?
Right, Jen. Well, I think, first of all, what's probably really high on the Politburo's mind is that, a lot of the ways in which this weak consumption this year was offset was when you're looking at particularly, external demand. So really, really surprisingly high export figures throughout 2025. That's despite the fact that China's really been embroiled in this ongoing trade war with the United States. I think the question, though, is how much that's actually going to hold up into 2026. And the feeling is that you might not necessarily see the same ability to sort of offset some of that weakness domestically with shipping items overseas. So that really does kind of make it part of the Politburo's and the Chinese government writ large's task in 2026 to figure out how to boost consumption. Obviously, they've turned to measures like sort of certain cash handouts and those kinds of things to up, that issue with demand. The question, though, is, will China resort to any kind of a stimulus in order to sort of help figures in 2026? I think the idea of, bazooka-style, large-scale stimulus is probably still very much off the table. But I think we can kind of look, in 2026 to other ways in which, sort of on a more measured perspective, China might be looking to boost up those consumption figures because, again, this is just something that's haunted China for years at this point, and it does seem like it's going to continue to be a theme going into next year.
Bloomberg's Jill Desis. Jill, thanks so much for the latest on those data figures from China. Now, National Economic Council head Kevin Hassett says he would consider President Trump's policy opinions if picked to lead the Federal Reserve, but that the central bank's interest rate decisions would remain independent.
I think he has very strong and well-founded views about what we ought to do. But in the end, the job of the Fed is to be independent and to work with the group of people that are on the Board of Governors at the FOMC to drive a group consensus on where interest rates should be. And to do so, basically with the guidance of the Fed chair. But in the end, it's a committee that votes.
Now, concerns over the earnings outlook for tech companies and their massive AI spending continue to sap sentiment, with Asian markets falling as the final full trading week of the year begins. For more market analysis, let's bring in Vincent Juvyns, Chief Investment Strategist at ING Belgium, joining us from Brussels. Vincent, thanks so much for joining us. Let's just start here with some of these AI bubble concerns, because you and your team, in some of your notes, you actually say there's not too much of a concern of a full AI bubble. Can you dig into that for me? What exactly does that mean, especially if we speak to some of the sell-off that we saw last week and where we're at right now?
No, clearly, I guess that's a pretty consensus in the industry, is that definitely we're not facing an AI bubble similar to the one we faced in the start of the year 2000, for instance. Situation is much more different at the moment, but stocks are priced for perfection for sure, which means that there's no room for complacency, and any miss or any cracks in the perfect story like we had that last week with a handful of stock can lead to a profit taking and to a sell-off. We remain at ING pretty confident that the AI complex will continue to generate value for shareholder. We are obviously aware that you need to be active in your exposure to this sector. This means not only looking at the Max 7 in the US or the tech sector in the US, but also trying to identify which region or which other sector are going to win in this AI battle that we are facing at the moment. And it's interesting that you were discussing this situation in China just now, because China just happened to be one of these countries which is really investing a lot in the AI complex, and which might tomorrow be the world AI champion, which is why at ING we diversify our AI exposure to China to benefit from, let's say, both environment. You can also have cheaper AI stock in China, which just happen also to generate higher earnings growth.
Have you identified what, in fact, you mentioned the regions and the sectors that are the winners and the losers. Have you identified where, in fact, those are? Is it China? Is that among the group that you've identified?
Yeah, China is just a nice way to diversify our AI exposure, but that's obviously within AI or within hyperscaler or chip manufacturer. But also the holy grail is probably to be found in the sector which will deploy AI in their own business to really disrupt their sector, and or which are benefiting from the AI-powered demand surge. For instance, in our asset allocation, we have also since long an exposure to the healthcare sector, which is probably one of the sectors which has adopted AI the earliest in its production process. In the US, there are now over 250 AI applications which have been approved by the FDA, and you see that every day you see new devices, new technologies coming to the market, which, if you remember, during COVID already used AI to produce those vaccines we badly need at the time. Another sector which is probably interesting to look at is definitely utilities, which we have recently upgraded. The demand for data center, for power for data center is just amazing. If you think data center in the US are probably consuming the equivalent of the yearly electrical consumption of Thailand. So it's just massive, and you see it everywhere. So investing in those companies who power these data center might be also a nice way to diversify our exposure to AI while still being linked to the theme.
Vincent, when you think about emerging markets and a diversified portfolio, and really maybe some of the rotation that we're seeing right now, how much rotation into EM is ING and your team looking at this point right now, and potentially as we start the year in 2026?
Well, EM remains by far our favorite region within our regional asset allocation. EM is relatively cheap, which is a feature that we like at the moment. EM is just growing much faster its earning than any other region at the moment, and expected to do so in 2026. We have the Fed easing. We will see at which pace in 2026, but definitely easing. So this will relax the pressure, the funding pressure on some EM countries. It will maintain the dollar under downward pressure. This is a perfect environment for EM. And EM, it's not only a cheap story, they're just growing faster than we are, and more innovative, like we've seen in China, for instance, in the AI complex and beyond the AI complex. Tech is definitely a key attention point of the government in their 5-year plan.
And yet you are still a euro-based investor, and so what is happening in Europe is still very important to you. How much weight do you put on what we are seeing in terms of the growth story in Europe, and potentially where you can allocate capital in terms of some of these sectors that you call winning sectors in the region?
Yeah, there's still plenty of opportunities in Europe. At a regional level, it's true that we remain neutral to Europe. We've seen a lot of enthusiasm earlier this year for good reason. The German fiscal development were interesting, but they're unlikely to bring Europe on a structural high growth path at the moment. So let's be clear, we are still looking at a growth environment hovering around or slightly below potential in Europe. So we need to find those sectors which are able to, let's say, capture the most of this growth story. And my area of enthusiasm in Europe is when we move the needle in terms of capital market union. And there's one sector which at the moment benefit probably the most from that is the financial sector. you see again more M&A, more talks about indeed European player in this field. So financial sector in Europe, utilities are probably the two areas I would look at in Europe at the moment.
Thanks so much. Vincent Juvyns, Chief Investment Strategist at ING Belgium. Really appreciate your insights this morning. Great to have you on the show. Thanks so much. Now, coming up, Ukraine's Volodymyr Zelenskiy hints U.S. security guarantees may stand in place of his country's long-term ambition of joining NATO. But is that enough to end the war? The details on that next. This is Bloomberg. Ukrainian President Volodymyr Zelenskiy has signaled Kyiv could accept security guarantees from the U.S. and Europe in place of its long-term goal of joining NATO. With me now is Tony Halpin, who leads Bloomberg Russia Economy and Government Reporting. So, Tony, what more can you tell us about these latest comments that we heard from Zelenskiy?
Yes, good morning. Well, President Zelensky is presenting this as very much a concession. Ukraine's concern all along has been that it needs to be sure that when this war ends, it won't be resumed, and that it can be guaranteed some security against future Russian aggression. And the interest in NATO, the long-standing desire to enter NATO, was a reflection of that. They viewed NATO as a guarantee against future Russian aggression. And the decision to say, well, I could replace that with some US and European security guarantees, President Zelensky thinks that might move the needle forward a bit. But Ukraine has bad experience of assurances from allies in the past, and indeed from Russia, about providing for its security. So they are very, very determined to ensure that any agreements that are made are in fact copper-bottomed and that they can be implemented in the event of a future crisis.
Have we heard anything from Russia about potentially whether or not these concessions, along with that Donbas referendum that was floated last week, would be enough?
Not really. I mean, it's interesting that so far all the concessions are coming from the Ukrainian side. We haven't seen any sign that Russia is willing to row back on its maximalist positions, and that will be key. Anything that emerges from today's discussions that continue in Germany will have to go to Russia, and it will be for Vladimir Putin to say whether he accepts or not. If he rejects them, then we're basically back to square one on the drawing board, and the war will likely continue. That then will be an issue for the US. How will they change their approach to Russia, which until now has been fairly accommodating in terms of helping Russia reach its objectives and finding some kind of compromise that would be acceptable to both sides. So far, we don't see what Vladimir Putin's position is.
And we know that talks are still continuing, though, with Zelensky and others. Tony Halpin, who leads Bloomberg Russia Economy and Government Reporting. Tony, thank you so much for the latest there. Coming up, global banks and hedge funds are scaling up in Dubai and Abu Dhabi, but is the significant rise in cost of living deterring people? We have more on that next. This is Bloomberg. This is Horizons Middle East and Africa, our top stories this morning. Asian stocks fall, tracking a Wall Street sell-off sparked by worries over tech earnings and heavy AI spending. At least 16 people have been killed at Sydney's Bondi Beach in Australia's worst terrorist attack after two gunmen opened fire on more than 1,000 people celebrating Hanukkah. And President Donald Trump says the U.S. will do big damage to the militants behind a deadly attack on American forces in Syria. It's just gone past 9:30 a.m. across the Emirates, 7:30 a.m. here in Johannesburg. In Cape Town. I'm Jennifer Zabasaja in for Jumana Bersechi. And it is, as we mentioned, the last full trading week of 2025. Rest assured, there is still plenty to get to this week. We have quite a bit of economic data points that we are waiting for. We got one earlier this week as far as China retail sales go, disappointing more than many people actually anticipated. market, and also some central bank activity after the Federal Reserve decision last week. We are still awaiting the BOE and also the BOJ this week. But let's just take a look at where our markets are trading right now. Just a bit of a snapshot if we take a look. U.S. equity futures rising right now, up just about 0.2% if we take a look at S&P futures right now, following what was a bit of a mixed week last week for Wall Street. A lot of the concern was around AI, potentially a bubble that many analysts are concerned about, and also some valuations. We saw a bit of a rotation out, but still we're seeing some upside right now for U.S. equities. We mentioned there's quite a bit of economic data points, at least in the U.S. and also as well globally, to pay attention to. If we take a look just for central bank activity, I mentioned the two that we're waiting for, just globally, the BOE and the BOJ. But still, the decision by the Federal Reserve still sort of permeating throughout the markets, especially if we pay attention to what we're hearing from some of the rhetoric from Federal Reserve officials, conflicting if you dissect what some of them are saying. That's playing out a bit in the bond market and might be throughout the rest of the week. The U.S. 10-year yield at about 4.1762 right now, the U.S. 10-year yield right now, and potentially we'll see some more activity as we hear some rhetoric from these officials throughout the week. Gold right now rising for a fifth day, up just over 0.8% to trade, over $4,300 an ounce there after having added more than 2% last week. Goldman among some of the analysts that are expecting continued upside for the yellow metal, potentially reaching even 4,900 is their expectations for the end of the year. And let's just finish on Brent crude, up just over 0.5% there. Still some concern about the supply-demand glut, rising, though, from its lowest level in 2 months. Let's just bring you your terminal chart really quickly. And that is concerning what we are seeing as far as Bitcoin and yields go right now. Bitcoin is currently trading below the 90,000 level. Still, it's been flickering up and down quite a bit as we see U.S. 10-year yields traveling back up to 4.2%. These two, the dichotomy between these two is one to pay attention to. Higher risk-free trade, risk-free rates may weigh on retail risk appetite. So potentially we continue to watch where yields go as we see Bitcoin continuing to experience a bit of volatility as we have seen over the past few days. Now let's move back to our top story. At least 16 people have been killed in a mass shooting at Australia's Bondi Beach on Sunday. 2 gunmen opened fire on a crowd celebrating the first day of Hanukkah in a park next to the beach. Australian Prime Minister Anthony Albanese called it a targeted attack on the Jewish community.
The government is prepared to take whatever action is necessary. Included in that is the need for tougher gun laws, including limits on the number of guns that can be used or licensed by individuals. A review of licences over a period of time. People's circumstances change. People can be radicalised over a period of time. Licences should not be in perpetuity. And checks, of course, making sure that those checks and balances are in place as well.
Bloomberg's Paul Allen has more details.
Bondi Beach at this time of year is normally crowded. Today the mood is silent, sombre, the area pretty much empty apart from a few dozen people who have come to lay wreaths and pay their respects to the dead. Among them a 10-year-old girl, also an 87-year-old rabbi, a father of 5. Also among the dead, the elder of the 2 gunmen, 50-year-old Sajid Akram, who was the legal owner of 6 firearms that were used in this attack. Surviving him was his son and accomplice, Navid Ahmed. He is currently in hospital in a critical condition. So immediately questions starting to turn to how could this happen. The Israeli Prime Minister Benjamin Netanyahu has said he warned Anthony Albanese 4 months ago that recognition of a Palestinian state would fuel the fire of anti-Semitism in Australia. Anthony Albanese pushed back on that narrative today, saying that now is the time for national unity. But those sorts of questions are unlikely to go away. We also heard from the former Australian Treasurer Josh Frydenberg, himself a member of the Jewish community, talking about how leaders had allowed a culture of anti-Semitism to ferment in Australia, with, as we can see, devastating, senseless and tragic consequences. Paul Allen, Bloomberg, Bondi Beach, Sydney.
We're also following developments from a mass shooting in the U.S. Police have detained a person of interest after the shooting at Brown University that left 2 dead and 9 injured. The school has sent students home and called off final exams, classes, and assignments for the semester. The shooting happened in a classroom on what was the second day of final exams at the Rhode Island University, which has about 11,000 students. Now, let's turn to the Middle East. The influx of global banks and hedge funds into Dubai and Abu Dhabi is driving up headcount across both financial hubs. But is the rising cost of living starting to dull the appeal of the Gulf dream for some professionals? Joining us is Oscar Orellana-Hyder, co-founder of Cordell Partners. Oscar, great to have you on the show. Thanks so much for being here. Let's just start here because we were mentioning potentially there is that appeal there, but is the cost of living potentially overshadowing the appeal? Talk to us about what you're seeing based on your analysis and from where you sit.
Yes, and thank you so much for having me, Jennifer. Really appreciate the time. To your point, the cost of living has definitely gone up over the last 5 years or so since COVID. The influx of people has pushed up the cost of real estate, the cost of schooling. There's more and more schools being built, big multinational brand names from UK and Asia. So schooling has increased year on year for sure. Having said that, I still think there is enough push factors from parts of Europe and Asia still, galvanizing that move. And people are aware of these numbers and they're aware of the cost of living. However, the pros and cons definitely they tot it up versus London versus Dubai or Abu Dhabi, and the quality of life, the help at home, the way of safety and education for their children and their families, it's far greater here.
And Oscar, can you just speak to maybe some of those incentives that you are seeing from some of the hedge funds and asset managers that are working in the region? Bloomberg has reported on some of those incentives, but are they actually moving the needle?
Are they moving the needle? I don't think someone will take a vastly disproportionate paying job simply because of the education or the accommodation allowance. I think they're definitely a sweetener and they are definitely an incentive to move the family from day one, as opposed to keep the family in another geography for the first 6 or 9 months, test the waters to see how we enjoy it, and then yes, dive in, and then yes, fully commit. I think that's a thing of the past. Having been working in the DIFC and the ADGM for 10 years, I think the government incentives and the government accommodation and schooling from 10 years ago, that has shrunk noticeably to a small percentage, I would say possibly even 15 to 25% of what it used to be. However, to your point, the total compensation packages, the way of life, the safety, security, the full picture, definitely still attracting, thousands and thousands over the course of 2025.
Are we talking about a very specific type of candidate, of employee, Oscar? Is it senior management, or does it sort of span the whole entire sphere of workers? Could it be first-time employees that are going to be new to the system in the region? Or is it people moving over with their families that are maybe making more of an impact as far as the expat community goes?
Yes, thank you. It's going to be the more senior echelons of that organisation chart. It's going to be the relocations of the MDs, the EDs, who are potentially setting up the office, establishing a presence, and going through the licensing and the onboarding and the in-principle approval within the regulators. That can be a heavy lift of 6 to 9 months before you've even got a licence. So there are additional stipends or additional compensation widgets that companies are putting in play in order to relocate their own internal people. To your point, and to so many points over the last 12 months, I think that the rise of AI and the rise of other processes, the junior layers, operational layers of employee are becoming less and less, regardless whether that's relocation or hiring here in the region. I think even mid-level, whether you're a revenue generator, whether you're raising capital from the region, or whether you're a portfolio manager who's had a phenomenal track record and sort of earned their stripes in Europe or Asia, wherever it may be, there's always a conversation for a relocation total package, and that can break down from, as I mentioned earlier, accommodation, schooling, different sorts of other long-term benefits, so memberships to make the trailing spouse, as we call them, more comfortable, and hopefully sort of replicate the environment that they've had in London or Hong Kong or wherever it may be.
Wow. Trailing spouse, Oscar. Oscar, I just wanted to finish on really this idea of where this goes next. You mentioned AI, potentially the impact that will have, but also we're seeing Saudi trying to attract similar talent and financial institutions into the kingdom. Where do you think this goes next?
Yeah, it's a really good point. I think you and I could sit here and talk for hours of the different projects across the border in Riyadh and what they have done and what they haven't done. I think it's only going to accelerate. It's only going to compound on what has been hired already. When I come back to the hiring numbers and the types of profiles, I think AI hiring is only going to be more and more so an increased percentage of our portfolio at Cordell Partners and across the street for sure. And that's across all different sectors. Of course, you know, investment management, asset management is our sweet spot, but we see it in real estate, we see it in legal, we see it in this new wave of fintechs. They're more than fintechs now, right? They've sort of doubled down on that asset class, and they're AI centric and autonomous. Is only going to be a greater impact in our industry for sure.
It's really fascinating. Maybe we'll be able to dissect it more next time. Oscar Orellana-Hyder, co-founder of Cordell Partners, joining us there in Dubai. Oscar, great to have you. Thank you so much for your time. And now for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. Now, moving on, Asahi is considering forming a new cybersecurity team with disruptions from a September ransomware attack expected to continue into next year. As parts of its efforts, the beer maker is adopting a zero-trust approach and scrapping the use of VPNs. The cyber attack froze Asahi's core business systems in Japan, resulting in November's beer and alcohol sales plunging 20%.
We're actively working to reverse the disruption, but a full recovery will likely take shape from next February onward. From that point, we plan to shift from recovery to resurgence, what we internally call the reconstruction phase. We recognize that some customers experienced inconvenience and that trust may have been lost in certain areas. We're grateful for their patience and are committed not just to restoring our shipments to past levels, but to exceeding them. This is the focus of our current internal discussions.
Coming up, President Donald Trump signals the U.S. will do big damage to the militants behind a deadly attack on American forces in Syria. We'll bring you that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Cape Town. President Donald Trump says the U.S. will do big damage to the militants behind a deadly attack on American forces in Syria. Trump blamed the attack on the Islamic State and praised the government, saying the Syrian government fought by our side.
I can tell you in Syria, there will be a lot of damage done to the people that did it. They got the person, the individual person, but there'll be big damage done.
For more, we're now joined by Bloomberg's Onur Ant, who is joining us from Dubai. Onur, so what more do we know about this deadly attack on American forces in Syria?
3 American personnel, 2 military personnel and a civilian interpreter were killed in the attack. This was the first such attack by Islamic State on American forces in Syria since the fall of Bashar al-Assad exactly a year ago. As President Trump said, the militant, the attacker, who was regarded as someone with links to or sympathy for the Islamic State, carried out the attack, and he was quickly neutralized by the Syrian forces. It is believed that the attack took place after a joint U.S.-Syrian military patrol in the central Syrian city of Palmyra. And the attack basically took place right after the patrol, while the U.S. and Syrian military personnel were going into a compound. The attacker managed to sort of get close to the group of people who did the patrol and started shooting at them. In addition to the American forces, a couple of Syrian military personnel were also wounded in the attack. And after the incident took place, the Syrian Interior Ministry said it arrested 5 other people, at least 5 others with links to this individual who was believed to have carried out the attack, Jennifer.
And Onar, we know that President Trump, of course, had met with the new Syrian president not too long ago. He said the president had helped fight alongside the U.S. in this current incident. But how active do we know is ISIS right now in Syria at this point in time?
Well, the short answer is ISIS in Syria is not what it used to be. So this group proclaimed a caliphate after sweeping through vast swaths of land, both in Syria and in neighboring Iraq in 2014, drawing in the U.S. Military a year later, whose mandate was to degrade the group. And that fighting over the years has taken place primarily through the so-called Syrian Democratic Forces, a militant group, another militant group backed by the U.S. What we have seen in recent years, and especially after the fall of Bashar al-Assad last year, is that ISIS has evolved from what it used to be a caliphate into more of an insurgency group. And according to recent analysis by the U.S. Department of Defense, the group now has fewer capabilities, fewer assets, fewer militants, but it still has some capabilities, as underlined by what happened over the weekend. It does have the capability to attack, but it's no longer what it used to be. So this is where the U.S. response becomes somewhat more trickier or more difficult to calibrate, because much of the fighting since 2015 has been through Syrian Democratic Forces to bring the ISIS control of cities, major cities, such as Raqqa, to an end. What is now, what we have now at hand is a fundamentally different situation. ISIS is a more scattered group of people whose main aim is fundamentally different. It has evolved from controlling cities into an insurgency in areas of Syria, trying to take advantage of the power vacuum created by the fall of Assad and the emergence of the new transitional government led by President al-Shara.
Yeah, it doesn't seem like the end of this story. Plenty to watch there. Bloomberg's Onar Ant in Dubai for us. Onar, great to have you. Thanks so much for your reporting there. Now, coming up, we move to Africa. Senegal Finance Minister says the country's key debt indicators are improving. We'll bring you that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Cape Town. Senegal's finance minister says the country's key debt indicators are improving as the government leans on local currency borrowing and what he terms favorable refinancing opportunities. For more, Bloomberg's Andiro Oganga joins us now from Kigali, Rwanda. So, Andiro, walk us through what we did hear from the finance minister. Potentially, this could be good news for the country, especially after a lot of bumpy roads as far as the fiscal situation for Senegal over the past year or so.
Morning, Jennifer. It's good news for the local market, but the international market is not convinced at all. And if we go to the genesis of this, Senegal has a pain point. They have a debt to GDP ratio of about 132%, and this comes from hidden debt of about $7 billion, which prompted the IMF to drop and suspend their $1.8 billion program to the country. And since then, they've been embarking on this insurmountable task of reworking that debt and bringing down debt to GDP, currently 132%. They're targeting to bring it down to about 100 and then double digit. But they're exploring several options. One of them is refinancing their debt. And the Ministry of Finance was saying every time we go to the market and we are refinancing our debt, what we're looking for is more favorable terms than we had previously. They're also looking at the domestic market, like you mentioned before. And while they're going into 2026, they're going in with a really big budget. They're looking at $13.2 billion as their budget deficit 5.4%. And this means that they will have to rely on local markets to finance this deficit. They're looking to borrow in CFA, and they'll also try and raise diaspora bonds and sukuk because they've been locked out of the international market. But the caveat to this is their spending is going to grow by 12%, debt servicing costs going to grow by 12%. And even though they're going to raise revenue, it's not going to be enough. And that's where we're seeing that disconnect between Senegal and the international market. Though the government is very adamant and says, we know where we are, we know it doesn't look good, but it's a liquidity problem, not a solvency issue. That's why we're talking to the IMF. We're trying to get a program. Though even those talks with IMF have had a lot of back and forth because they've differed on fundamentals, microeconomics, treatment of the debt, and how they're going to work on it. The criteria is very different. And so going into the new year, even though Senegal is optimistic, the market is not. And we see that from the 2031 and 2033 Eurobond and the hits they have taken. And Bank of America is now saying that because we haven't seen cuts, Senegal is likely to default in the second half of 2026.
Yeah, hopefully 2026 a little bit smoother for Senegal. Bloomberg's Ndiro Ganga in Kigali, Rwanda. Thanks so much. That's it for Horizons Middle East and Africa. I'm Jennifer Zabasajja in Cape Town. Stick with us for Daybreak Europe. This is Bloomberg.